In the near future, China is going to make up a third of the world's oil demand growth, and that need has driven their foreign policy around the world. We have seen that whether it's in Sudan or in Burma or in Central Asia. We've seen some of the consequences because it's all about resources for Beijing. And I'd add, where China goes, corruption often follows in terms of their attempts to have access to this. Well, now they're in our hemisphere. Now China is here. They've established a working group on energy, and Chinese companies have invested $10 billion in Canada's oil sands. Now, this is my perspective on this, but it seems to me that the Obama administration has laid out a welcome mat for China with respect to the Keystone Pipeline project and the decision not to go forward. And I base that partly on the reaction in Canada, or if any of you, if any of the members of the press would like to talk to the Canadian Embassy about this. This really pained the Canadian government. And just days after the Obama administration announced the Keystone delay, Canadian Prime Minister Stephen Harper met with China's Hu Jintao. And Harper was painfully blunt. And what he said was, quote, "This does underscore the necessity of Canada making sure that we are able to access Asia markets for our energy products." That was his quote. And those remarks spurred headlines around the world. Reuters said, "Asia a priority for Canada after U.S. delays Keystone." And in the Wall Street Journal, "Canada shops oil after pipeline halt." And it is a halt. I had a press conference not long ago with the representative of the pipeline company, the company that's making that pipeline. So they said last week they laid off 60 of their employees, and there's more layoffs coming as a consequence of this decision. And indeed, there are now Canadian proposals to dramatically increase the capacity for oil from Alberta to reach the Canadian West Coast in order to be shipped to China. These plans are being set with a view towards diversifying away from an unreliable partner, the United States. And instead, they're looking to China. And this is all being planned with a long-term focus on the Chinese market in mind. Now, Mr. Durbin, Canada's not waiting around. I wonder if you share my concerns, and I would ask, how accessible is Canada's Alberta oil market to the Chinese market?
Mr. Chairman, thanks for the question, and I'm not sure I can give you a clear answer on the accessibility of China to the Canadian market, other than to say, as you pointed out, I mean, they've made significant investment in the oil sands, and I don't think that's any surprise. I mean, it's been pointed out. I mean, that Canada has an enormous resource that they're sitting on top of. They are going to find a way to get this to market. I think our focus, and certainly at API, is, we share your disappointment with the decision to delay the pipeline. But we are today utilizing oil sands and Canadian energy resources to a great extent, and I think it is in our national interest, our energy interest, our security interest to enhance that even more. And so there's no question that Canada is going to find outlets for the oil sands crude, and we just believe there are just too many benefits from a job creation, economic growth, energy security, and national security to bypass that opportunity.
Well, let me follow up with a quote from the U.S. Department of Energy, the study that they commissioned, and this is their conclusion. If pipeline projects to the British Columbia coast are built, they are likely to be utilized. This is because of the relatively short marine distances to major Northeast Asia markets and future economic growth there, and because of increasing ownership interests by Chinese companies, especially in oil sands production. Such increased capacity would alter global crude trade patterns. Canadian crudes would be, quote, lost from the USA, going instead to Asia. There, they would displace the world's balancing crude oils, Middle Eastern and African predominantly OPEC grades, which would in turn move to the USA. The net effect would be substantially higher U.S. dependency on crude oils from those sources versus scenarios where capacity to move Canadian crudes to Asia was limited. So we have a choice, and I would ask you: do you share this analysis that Canadian oil, in these words, could be lost to China? That's their quote.
Again, the DOE report, I mean, I certainly think that is a concern. And our broader concern has got to be, can we better control our energy future? And the resources we have available to us from Canada is one of the critical paths we have to take going forward, to again, retain that control.
Well, you said in your testimony we have a simple choice before us. I think it's a pretty straightforward one.